It's that time again, time for the mortgage interest rate update for January of 2022. And we are going to talk about all things full featured interest rates, all things discount rates, all things fixed versus variable. And we're going to talk about the short-term outlook for both fixed interest rates and the long-term outlook for variable rates.
The definitive guide on how to manage your credit. Product, penalty, price, in that order. It's never been more important to get your mortgage right.
All right, so welcome back to the first mortgage interest rate update of 2022. Some interesting things happening in the market, especially with respect to fixed rates and where they're sitting right now and where we're expecting them to go. Also, some really great rate specials out there on some short-term mortgages, which we'll get to at the end. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers, where one lucky winner is going to win $5,000 just for subscribing to this channel. But in order to win, you have to be subscribed. We're going to give away that money when we hit 25,000. So go ahead, share this video, tell your friends, get them to subscribe. The faster we get there, the faster somebody's going to get $5,000. So let's get into it. Let's discuss mortgage interest rates for January of 2022. I fully expect that we're going to see 5-year fixed rates come down. Reason why, and I'll take you in and show you right here, is if you take a look at the 5-year bond yield, you can see that it is quite lower than where it was at the heights in mid-November. In fact, we're looking like we are back at October 5-year bond yields. Now, 5-year bonds are used to price 5-year fixed mortgages, and we are in a place where the 5-year bond yield is pretty much equivalent to where it was in October of last year. However, interest rates haven't come down. So what we're expecting is that interest rates, 5-year fixed rates, are going to come down as lenders get more competitive going into the beginning of the year. Because pretty much at the end of the year, most of the banks are at the beginning of their fiscal years. They aren't competitive. They don't want to see their underwriting centers overwhelmed over Christmas. So they pretty much just leave it and they don't get competitive. They give everybody a little bit of time off, especially after a year like 2021. And now I fully suspect that as we get into the year, we're going to start to see lenders want to get more competitive. They're going to start cutting interest rates, and we're going to see those 5-year fixed rates come down, assuming that bond yields stay where they're at right now. By the way, this website that I'm showing you right here, it's mortgagedashboard.ca. You can go ahead, take a look at it. It's meant for industry professionals, but it's good for pretty much everybody to look at. And if you go ahead and you take a look at this site, it's got things like the 5-year bond yield, the 2-year yield versus the Bank of Canada overnight rate. And it's got a bunch of really great indicators. These key rates at the top are really important. The 5-year Canada bond yield, again, what is used to price 5-year fixed rates. The overnight target rate, obviously that's the Bank of Canada rate. 30 days bankers acceptance rate, that is what's used to price variable rate mortgages, and things like prime rate and the benchmark rate, which we're all aware of. So you can go in here, you can take a look really quickly to see what's happening in the industry with respect to interest rates and the underlying interest rates that basically are used to price mortgages or to qualify for mortgages. So if you're an interest rate nerd like me, you can go ahead, you can take a look at all that data, and you can, get in there and really get into the depths of things. By the way, if you are looking to get into the mortgage market and you are trying to figure out how mortgages are priced and what's a good deal and what isn't a good deal, the differences between discounted rates and not discounted rates, and how much margin is actually built into mortgages, I explain all of that stuff in my course, Secrets to Getting the Lowest Interest Rate. You can get that course at ratesecrets.ca. It is priced at half off right now just because this year, we want to see 1,000 people take that course. So we're giving it away almost for free in order to get as many people as possible into it early in the year so we can achieve that goal. So it's got really great information. I guarantee that if you take it, you will get at least 10 times your money back by knowing how to negotiate with a broker, by knowing how to negotiate with a bank, by knowing how much margin there is in the mortgage and how much you can actually negotiate, and also by knowing all the other things that you can get thrown in, like your appraisal and your home inspection and so on and so forth. And I'll teach you everything about how to do that in that course. And I've also put one extra thing in there, which is a 10 times your money back guarantee if you choose Mortgage 360 in order to get your mortgage. So you'll get at least 10 times your money back guaranteed if you choose us to help you, because a lot of people go through that course, realize that there's a lot to getting a mortgage, understanding the difference between discount and full featured mortgages and so on and so forth. And they choose to just have us do it for them. But nonetheless, I guarantee you'll get all the information you need to be super informed. And you'll also get that opportunity to save at least 10 times your money back, if not significantly more. We have lots of people who have gone through that course who have gotten 50 to 60 times their money back by knowing exactly what to say to their banker or to their broker, which is absolutely amazing. So let's get into the actual discussion with respect to interest rates. We're going to talk about full featured mortgages first. Full featured mortgages are the types of mortgages where you've got all the opportunities, all the bells and whistles, all the features, and the ability to basically pay your mortgage down faster if you choose to, with the opportunity to also leave your lender. So if you decide you don't like your lender, you can pay your penalty, you can leave. And that gives you a lot of the flexibility that you need down the road to make good decisions with respect to switching lenders and getting better deals and so on and so forth. So we always recommend full featured mortgages. We'll talk about discounted mortgages in a minute, but let's start with the 5-year full featured fixed mortgage. It is priced right now at 2.69% if you have an insured mortgage or greater than 35% down. Of course, insured and greater than 35% down being the least risky mortgages for the banks, which is why you get the best rates. And that 2.69 interest rate is quite high compared to last year, still pretty damn low compared to historical levels. And keep it in mind when we get to the variable interest rates, because what you're going to see is that there's a big gap between variable and fixed. And I'm going to talk about how to take advantage of that later on in the video. Now, moving on to those mortgages where you're putting between 20 and 35% down, these carry a little bit more risk. Obviously, if you have a mortgage that isn't insured and with a smaller down payment, which is 20% down, you are the most risky type of mortgage for a lender. So therefore, interest rates are between 2.74 and 2.84%, the higher rate being for the smaller down payments and the rate getting lower as you get closer to 30% down payment. Again, these are full featured, leave your bank if you don't like them type mortgages with really good calculations from a payout penalty perspective. By the way, if you aren't sure which lender to choose, you can always come to Mortgage 360 and we'll help you with that. Now, moving on to variable interest rates, 1.35% right now for 5-year full featured variables. This is again for insured or greater than 35% down. This is the mortgage that most of my clients are choosing, not because I'm suggesting that they choose it, but because of the difference in the amount of money that they're paying out of pocket. So when you take interest rate and you get rid of interest rate as your means of determining the price of a mortgage, and you start to look at mortgages from the perspective of what does it actually cost? So in other words, dollars, it starts to get really interesting. So look at this compared to the 5-year fix, and you've got about a 1.3% difference. That means it's about a $1,300 difference for every $100,000 in mortgage that you have. So if you've got a $500,000 mortgage, that means you're going to pay $6,500 more per year for a 5-year fix than you are for a variable, at least for as long as variable rates remain where they are. But what it also means is that it's going to take at least 5 interest rate hikes before you get to the point where you're going to be paying a similar interest rate to what the 5-year fixed is. But you've also got all that time that you've been paying the lower interest rates where you've been saving money. So when you finally get to the point where you're paying 2.65% on a 5-year variable mortgage versus your 5-year fix, well, then you've got to get even more interest rate hikes to cancel out all the time where you had savings. So the reality of it is right now, if you're choosing a variable over a fixed, it's probably going to take somewhere between 7 to 10 interest rate hikes before you're in a place where you're losing money. So in other words, that's 2 to 2.5% in increased interest rates, which is a pretty big number and is far more than most economists are predicting right now. So the variable rate mortgages make a ton of sense right now. Now, the key thing here is you want to make sure that you're saving for a rainy day. I suggest figuring out what your 5-year fixed rate would be, figuring out what your 5-year variable rate is, figure out the difference between those, take that amount of money, stick it aside every month until you need it. Because one thing's for sure, I am a big believer in the fact that you are far more secure having a variable rate mortgage and a ton of cash than you are having a 5-year fixed rate and paying a significantly higher interest rate, essentially for security against higher interest rates, and basically giving them all the money that you could use in the event that interest rates actually went up. And by the way, if interest rates don't go up as much as expected, you win because you've got all that money set aside. You didn't give it to the bank. And oh, by the way, you also didn't have a ton of exposure on the payout penalty as you would on a 5-year fix. Because keep in mind, you have more exposure to higher penalties on 5-year fixed mortgages versus variable rates typically only have a 3-month interest penalty. So you always know exactly what your penalty is going to be. Now, moving on to 20 to 35% down payment, you can see these are priced really competitively as well. 1.35 to 1.45%, again, for those full featured mortgages with all the prepayment privileges and the ability to switch and leave and go to a different lender. Now, moving on to discount mortgages. So what is a discount mortgage? Well, a discount mortgage is exactly what it sounds like. It comes with a discount. And in order to get a discount on most things, you have to give things up. And in most cases in mortgages, it's flexibility. So there's two ways you can do that. One is by having a significantly higher penalty. If you see a bunch of these interest rates running around that are way lower than 1%, they are often coming with very, very significant penalties. And keep in mind that 6 out of 10 mortgages don't make it till the end of the term. So there's a high likelihood that even though you don't expect that you're going to have to pay out your mortgage in the first 5 years, you may have to do something. You may have to change something. I was just talking to a client prior to filming this video that is selling their house after 2.5 years. They did not expect that they would ever do that, but here they are in a position where they have to. So keep that in mind. Things happen and you want to have flexibility. So avoid the large penalty mortgages. And also the other way that lenders basically give you a discount is by taking things away. So things like your prepayment privileges, which arguably isn't a big deal, but the one big thing that is a big deal is when they take away your ability to refinance or switch and leave and go to a different lender. Because if they do that, it becomes highly problematic. For a variable rate mortgage, it becomes problematic because if you decide you want to lock into a fixed rate mortgage, you basically don't have the ability to leave. So they get to dictate whatever interest rate they want you to pay. And because you can't leave, you have no negotiating power. And if you have a 5-year fixed rate, if interest rates do go down or there is an opportunity to save money, because you've got no ability to switch and go to a different lender or refinance, you lose the ability to save down the road. So these discount mortgages eventually do come to bite most people in the butt somewhere down the road. They just don't expect it. They can't see into the future. Nobody can. And ultimately, they're one thing that we highly recommend clients avoid. But I believe in transparency. I believe in showing you guys all the information. So if you're to go and Google lowest interest rates Canada, these are the interest rates you would find. Right now, 2.44% for a 5-year discounted rate for insured or greater than 35%. You can see that the difference between the interest rates isn't significant. It's about a cup of coffee a week or 2 cups of coffee a week. So really, you're paying slightly less on a weekly basis and giving up the opportunity to save a significant amount of money somewhere down the road, or find yourself in a position where you can't lock in at a really good rate and you end up paying higher for a fixed rate. So it's really, something you have to keep in mind is the dollar amounts, not the interest rate. When you look at it, a cup of coffee a week, is it worth it to not be able to switch and go to a different lender and basically have to do what they tell you for the next 5 years? With respect to 20 to 35% down, we're looking at 2.49 to 2.59%. And then getting into variable rate discounted mortgages, you're looking at basically 1.05% on an insured mortgage, or you're looking at 1.05 to 1.15% on a 20 to 35% down payment mortgage. So again, this is where it gets really interesting because that's really low interest rates. But if you decide that you want to lock in at some point down the road, or interest rates surprise us, it can go up substantially and you can't lock in, because they get to dictate the interest rates that you get to lock in at, well, that's where these become really, really problematic. So for, again, those 2 cups of coffee a week, I recommend taking a 1.35% or a 1.45% mortgage over a 1.05 or a 1.15%. But what it comes down to is get your broker or go into our mobile mortgage toolbox app and figure out what the actual dollar difference is, so you can decide if locking into a discounted mortgage is a risk that you want to take. Now, I promised you that I would talk about the 3-year variable rate mortgage that's out there. Actually, a pretty good product. It's at 0.99%. It's with a decent lender. It's got full prepayment privileges. It's got a normal penalty. It's a good mortgage, especially if you're in a position where you're in a 5-year mortgage and you're a couple years into it, you've got maybe 3 years left, and you want to have the ability to switch from a higher rate mortgage to a lower rate mortgage. Really good opportunity there to take advantage of that difference between that 0.99 and whatever you're at and have some pretty significant savings. So really great rate special right now. I fully expect that we're going to see a lot of other rate specials coming out in the near future, especially on the 5-year fixed mortgages. We may not see many others that are as good as that 0.99% rate. By the way, if you want to know where it is, the way you find out is by applying for a mortgage with us and getting the mortgage through us. Really great product, and we would love to help you get it and be your broker. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video. Don't forget about our race to 25,000 subscribers. Share this video, tell your friends, get them to subscribe, tell your family to subscribe, and we'll see you on the very next video. Cheers.